Hey, what's going on, everybody? Welcome to Ticker Talk for Wednesday, February 8th. Let's get right into this. Everything we do here is for educational purposes only. We do not provide investment advice, and we're not investment advisors. All statements made here are my own personal opinions, not to be considered advice to buy or sell any security, and all trading investment decisions are your own and done at your own risk. I'm Kevin D in the Discord. Started trading in the mid-90s, now full-time trader, chartered market technician level 2 candidate. I think you all know who I am anyway, though. If you're watching the recording, go ahead, smash that like button for me if you don't mind. Really appreciate it. So we're going to take a look at the markets here really quick before we get into the sorry, just one sec. Yeah, before we get into the ticker talk portion, we're going to take a look at the market, see what's going on, and see what kind of week it's been. Here's a hint, it's been volatile. So let's take a look. Let's bring up our charts and take a look. All right, so this is the S&P 500, of course. We always start there. And you can see that, we recently broke through our downtrend. That's great news. We're making higher highs, higher lows. Everything's good. We're in an intermediate term uptrend. Now, over the last week, you can see that we have been quite volatile. We've pulled up. We've had this nice rally, and we've pulled back a little bit. This is a really minor pullback so far. But I'm starting to, and it was expected. If you watched last weekend's video, I was calling for a pullback, and we got exactly that. Now I thought that a shallow pullback would bring us to the 0.236 Fibonacci retracement, and that's exactly where we stopped. Also at that 9 exponential moving average. We bounced nicely off of there yesterday, had a nice big green bar and a really volatile day from AAPL. If you haven't seen the intraday chart on that, you really should take a look. You know what? Actually, why don't we look at it? It's a fun looking chart here. So right here is where AAPL started talking, and it went all the way up, came all the way back. Nice round trip there. I traded this beautifully. I got in when it started going up, around here, and I could tell the momentum was changing here. I got out, went short here, and rode it all the way back down until we started to bounce here again. I thought once we were here that I thought we were just going to chop around and go sideways the rest of the day. I was kind of surprised, and I didn't really catch enough of this on the way back up again. Yeah, I was really quite surprised when all this strength came back in. And look at this, just rallied, a little bit of a consolidation, rallied all the way into the close. But man, what a day it was yesterday. That was fantastic. Some beautiful trading in there. Today, not so much. You can see today was kind of like a choppy grind down day. So not great. And it doesn't look great on the daily chart either. I don't like the indecisive inside day here. However, we're still above that, the Fibonacci retracement, we're above major support. If you read the morning briefing this morning, I did say, let me bring that in here. Sorry, bear with me one sec here. Here we go. So this is our morning briefing. Right here. Okay, I was talking about, if this area holds, is enough of a pullback, talking about, the gap down in the morning, is it enough of a pullback to encourage the bulls to buy? A break below SPY 413 fairly quickly brings a test of 410. And that is exactly what we got today. If we look at that intraday chart again, you can see that, we were above. Here's, that's our 412. Here's the, sorry, I said 413. Yeah, here's 413 right up and around here. You can see this big red candle is when we broke 413 and came down all the way down to, the first time it came down there was 410.15. The second time it came down, it was 409.96. Close enough for my money. I'm really happy to see that it held there, though. We had a couple of tests on that area, couldn't break through. We held it. And as you can see in the after hours, we've actually been grinding up a little bit. So that's nice to see. It is concerning. I mean, I really would have liked to see this move here, maybe pull back a little bit and then continue back higher, maybe close up around the highs of the day. You know, you don't always get what you want, right? That would have looked a lot better on the daily chart than what we actually got. So my thinking here is the more time we spend in here, the more likely we are, I think, to pull back. You know, if we pull back again tomorrow and we do break through that 410 area, then I think we come down and we test this 382 retracement at around 402. Break down below there brings us down into this trend line and the 50% retracement. I don't think, like, the market's not panicking yet. I mean, they could, if we start coming down through these levels, it could start to panic and bring us all the way down to this 50% retracement. So just be aware that that's a possibility. And I think the longer we chop around here, you know, the more likely that becomes. Remember, you know, bottoms are often V's, right? Like, you know, a V like this, but tops are often rounding. They can go on for quite some time. And this is starting to look a little round for my liking. So I think it's a good time to be cautious. And, you know, if you look at the setups that we looked at last weekend, really only one of them worked. Another one looks like it's going to start. The meta short looks like it actually might work tomorrow. So maybe keep it close. We'll look at that in a little bit. But yeah, if you look at any of those setups and you look for setups, what you're seeing is sort of a bunch of choppy looking tops. Or topping type action. So I think that caution is warranted right here. Let's really quickly take a look at the Qs. It's pretty much the same deal, right? You can see found support pretty much very close to that 236 retracement, still above it, and inside day as well on the Qs today too. Indecisive action today. IWM. This chart is really technically a lot cleaner. Look at this. Now, and you know, one of the things you can say, and if you are saying this, you'd be perfectly correct. Hey, isn't this just a bull flag? And you know, you'd be absolutely right in that analysis. We are looking at a bull flag here, right? We expect that to break to the upside. I just think that I think it's going to fake us out to the downside first, and look at. I mean, the reason for that is we've got a number of support levels. We've got the fib, and we've got the support that goes way back in time at 192 on the IWM, and you've got, you know, some major support levels. This 188 on IWM is right at the 382 retracement. It all just seems to set up too cleanly, too nicely, for a move down and then a bounce. So that's why I think we've got a little bit more downside ahead of us, but nothing really serious. I don't think this is the end of the uptrend. I don't think the bear market's coming back. I don't think we're going to new lows or anything like that. But like I said, it is a good time to be cautious. Let's take a look at the VIX, the volatility index. And you can see that that is still holding below 20, which is nice to see. But, you know, it's moved up a level from these lows down here. You know, that's fine. I'm fine with it. You know, between 20 and 1850, chops around in there, I'm okay with that. Let's take a look at the 10-year yield. Not a ton going on here. I think the 10-year bond auction was today too. Indecisive candles there as well, although it has had, you know, quite a rally over the last week, right? But momentum has slowed right at this downtrend line, exactly what we need to see. This is technically well behaved, and we would expect to see this now roll over here. And this rolling over here would be good for equity markets. All right, let's take a look at the dollar index. Remember in the weekend video, I asked you guys to comment on what you thought was going to happen when we got into this cluster of resistance. Didn't actually get any comments, unfortunately. I would have been really interested to know what you guys thought of this. My thinking was it stalls there. I didn't think it would pull back right away. I pretty much thought it would do this kind of thing. And it got there a day sooner than I thought it would. I didn't think it'd get all up there in one day. But anyway, this is stalled. That's good to see. We don't want to see this rising dollar or this, you know, this little 3-day rally that it had is really affecting or has affected international markets. They've stalled out. We would like to see this roll back over, and this is a bull flag here, though, or it's the beginning of a bull flag potentially. But it's a bull flag in quite a downtrend. So nothing to be concerned about yet, and this should be fairly stiff resistance right here. Okay, let's go next. All right, let's look at nothing going on in international right now. It's just kind of like chopping around. It have pulled back. Not a lot of change from the weekend. Gold, however, gold is drawing a bear flag. This bear flag, you don't usually see people point out bear flags that often. This one is like perfectly textbook. It's just a beautiful looking bear flag. And look the way it is forming right underneath the 21-day moving average, under the 9-day moving average right there. And you can see these are futures, so the new day starts today. So this little tiny piece of red here is the beginning of what we'll call tomorrow's candle, right? So anyway, you can see I've measured out, move on the bear flag if it does what we expect it to do, and that brings us down just below this 1800 level down there, the 200-day moving average as well. If this should break down, that would be quite a move. You know what I mean? It says only 5%, right? But that's a lot for gold. Gold is not that volatile. What's the ATR on gold? Yeah, the ATR on gold, average true range, is only 1.4%. So yeah, that'd be a pretty big move, but gold can make big moves. Have you seen right here, right? 2 days down 5%. Okay, what about the miners? The miners are trying to hang on to support right here. Just barely, though. I mean, this kind of looks ready to break. However, it is strong support. We've got the 50-day moving average there, and we have an uptrend just below. Okay, silver. Same sort of idea with silver. We were right on a support resistance line. It's trying to hang on there after a big move, but that's kind of a bear flag, isn't it? How about copper? What's going on there? Copper looking a little better than some of the other metals, although this has rolled right over, and it is a bear flag. Now, what the one hopeful thing about copper is that we don't have a really nice looking flagpole, right? We don't have that textbook flagpole like we did in gold. It's a bit of a decline, and really what's happening is almost as if this is starting to roll back up. But it's probably going to do what the other metals are going to do, and they don't look very hopeful right now. Let's take a look at crude oil. Crude oil has had a really nice bounce. We've had 3 nice up days here right off of that pivot, right where it really needed to get it together and throw a bounce in. So good to see, but there's a ton of overhead resistance here. So it'd be nice to see another day or two of up, and then stall out in here, go sideways again, like it did here, except this time, hopefully be able to break out to the upside of that. But yeah, I think the big scare in oil is off for now, but there's still plenty of work to be done here. Nat gas also looks like it might be trying to find a bottom. This is the longest sideways action we've had in this since this decline started. So this is good. Let's build a base down here and see if we can get a move back up in that gas. XLRE, the energy ETF, kind of some choppy sideways, a little bit of a pullback, starting to move back up. XOP is even choppier, if I remember. Yeah, it's not thrilled about this, but it's not terrible either, right? If we can turn up from here and go and make a higher high than this, then great. This confirms the higher low if we do that. So there's potential here, and OIH is still looking great. It's still hanging out at these highs. These oil services companies, are really hanging in nicely. And you would expect with this move back in oil, with the move back in some of the other energy ETFs, that these companies would be hurting too. But look at, I mean, we are just below all-time highs in this ETF. It's pretty amazing. So, you know, if you're looking to be in this space, I think that, or in energy, you know, the oil services companies are a place to look. See if there's any that have maybe been beaten. See if there's any that are near highs, but have beaten down a little bit more than this. Maybe you can get a catch-up play in those. 10, the solar ETF, doing what it does, right? Chopping around, trapped in this range. I should actually, we should really duplicate this, oops, and get this on the bottom too, just to show how important this line is, or this range is, right in here. There we go. Yeah, you know, the problem when you get in these ranges and it becomes really obvious, that's kind of when it falls apart. You know, I mean, the obvious play here is like anytime it comes down to the bottom of this range, you buy it, you go long. When it gets up to the top of the range, you sell it and go short. You know, you just start, it's called a stop and reverse. You go right from, you know, you go right from long to short here. But this trade is too easy now. Everybody can see this, and which means it's probably going to stop working. And that means, you know, do we break out the downside of this now? I'd be careful in your solar stocks right now. Let's take a look at consumer discretionary. Not a lot going on, a little pullback with the markets. Not really a clean bull flag or anything like that, but it's holding above resistance. It's holding on that 200-day moving average. Nice reversal candle yesterday, but again, not a great candle today, right? A reversal candle and then no follow through. It's not what we want to see. XLI industrials, these are hanging in pretty nicely. The same idea though. I mean, we had a little bit of a flaggish sort of pullback. We had a nice reversal candle there. I mean, it wasn't much of a downtrend to call this a reversal anyway, but a nice bounce right off that 20-day moving average, and then an indecisive candle. But the way they bought that 20-day moving average, I bet you if we come down here again, they'll buy it right on that 20-day moving or 21-day moving average. Financials, one of the better looking sectors for sure here, up near all-time highs. Looking good. Nice big green candle yesterday, pulled back a little bit today. Again, indecisive near a top is generally not what you want to see, but it's, you know, there's still strength here for sure. Technology looking surprisingly healthy through this. Yeah, we had a red day today. We had a pullback, you know, but this is a nice little base up here. So, you know, let's see if we can hold on to this base, build some strength off of this, and then move higher. So watch for the break above that. Communications, as always, the weak link here. You know, had really nice, and we should really, you know, I mean, we'll put this in context by moving back, right? When I say the weak link. Okay, so you know we've had a nice rally, cracking through some resistance levels, but couldn't take this sort of final resistance, downtrend resistance here on that trend line. So failed there. It's pulling back, and you can say, yeah, this is a bull flag, right? I don't like flags that have big gaps like this, though. Because so many people believe that all gaps get filled. But let's say we drew a flag on that. What does that look like? Duplicate that guy. I gotta make myself a shortcut key for the duplicate. Okay, so there's our, oops, that comes up a little bit higher there. So if that's our bull flag, then we've broken down out of it today, and we've closed below the flag. We've also closed right on the 9-day you know, moving average, and we've got a little bit more gap here to fill. This does not look healthy for the communications sector. So you know, that's Google, it's Meta, stocks like that. Not ideal price action here. Now, there's nothing to say that this has to continue down, right? This could turn into this could turn into a failed, from failed moves come fast moves is what we usually say. So if this is a bull flag, we'd expect that to break out the top side. If this breaks out the downside and then flips around, well, that's a failure of a failure, and it could move up very quickly. Doesn't look like that's what's going to happen, though. All right, let's take a look at Meta. You know that Meta was one of the stocks we were watching for a short entry, and look at we're almost right there. If you're really aggressive, you could have gone short today. I think that you want to wait, somewhere in here, somewhere between 180 250, and I've got my alerts set just below the low of that. I should crank that up a little bit. If we gap down at all tomorrow, this looks like it could be a gap and go, and work on filling this gap. So this is definitely a trade I want to take. The risk here is initially you've got to be above today's candle for your stop. So that's a little bit. I mean, that's $10 wide, right? That's about 5%. That's a lot. Just means you got to go smaller. I mean, I guess you could tighten it up, especially if it looks like it's moving fast. Maybe to 188 or something like that would work. But however that goes, right? If it starts moving my way, I'm going to want to tighten that stop up really quickly as it goes my way. So that could be an interesting trade for tomorrow. Apple. So Apple's still kind of like, this is not a bad looking bull flag. This is not too bad. If you're really bullish on Apple, I mean, you could just buy above today's high, buy above yesterday's high, if this goes to the upside. But you kind of want, the market to be on your side with that too, right? You don't want to be going long in Apple if the rest of the market's falling down. Amazon. So Amazon, remember I was talking about in the SPY how, we're looking at a retracement. The SPY and the Qs, their retracement stopped at 236 retracement. Amazon paused for a couple of days around the 382 retracement, and you can see yesterday it came right down to the 50% retracement, just below its 21-day moving average, and put in a nice reversal candle. And then what did it do today? It just gave it all back, right? It couldn't follow through on that nice hammer, that nice reversal candle. And look at that, it had good volume too. You always want to see good volume on your hammer candle, but this one didn't work. And we're almost right back down that 50% retracement again. So, this is sort of one of the clues that this market is not quite ready to, start moving its way back up. Needs a little more sideways action, maybe even needs a little more pullback. Some more pullback in the Qs. Next spot you're going to be looking for support is at the 618, which is what, about $94. Netflix. Nice base here. Hardly any. Look at it. I mean, virtually no pullback in Netflix. Looking really good. Looking really nice to set up for another leg higher. Where does that take you? It takes you into this old gap from back here, another big earnings gap, right? Next leg up takes you into that, so you want to be watching for resistance. First spot is 400. Yeah, that's a no-brainer. But I have a feeling that Netflix just wants to go higher, maybe a little more time sideways. Catch maybe some of these slower trend lines and then make the move up. Okay, what else? Google. Google. So Google had a big event Google had a big event, I think it was in Europe or somewhere this morning, to launch their BARD. Oh, Paris. Oh, thanks, Marvin. So yeah, Google had an event in Paris to launch BARD, their answer to ChatGPT, and it answered a question incorrectly in front of everybody at this event, and of course the stock started falling apart, and it's down. Oh my God, down 7.7% today. Nasty. It did bounce right at the 21-day moving average, so that's nice to see. And it's kind of closed just below this little former resistance line. So maybe it can try and take some of this back. Actually, I want to see what this is doing in the after hours. Oops, wrong one. There we go. Oh, nothing. Just going sideways. Okay. Yeah, poor Google. So initially that worked for Microsoft. Google was going in the pre-market this morning. Google was going down. Microsoft was going up. Why don't we take a look at that? You can see, I think that news on Google broke around here. And you can see that started going up. It opened up nicely and then just started giving it all back. And much like the market, gave it all back all day. What was Microsoft down? Only 0.3% though, outperformed the market. But yeah, who knows? I mean, that's a nasty, ugly reversal candle there. That's not healthy. I would not expect a green day on Microsoft tomorrow, because I think that Google's failure, eventually reminded everybody that ChatGPT isn't perfect either and has wrong answers all the time. They both have their issues. Tesla, interesting action in Tesla today. Nice green day. Up 2.25%. Attacked that 200 and wants to get through. Yeah, initially I was doing some scalping in here today and sold the 200 initially for a little scalp. Did okay on that. It went back up there and started going through. Took a little scalp to the long side. There wasn't a lot in it, unfortunately, but got a little something there. These are really tight range days, right? What's the 7% is 7% is an average range on Tesla, and today, really, we've got a range of about 196 to 202, 3%. So yeah, this is really tightening up in here and just below resistance. We should expect a big move out of here soon, either up or down. I'm not really sure which way. I mean, it's come up so much. It really seems like it needs to roll over, but you think if it was going to roll over, to do it now when everything else is. So maybe it'll be all right. Okay, semiconductors. Nice bull flag still. This is the bull flag here is hanging in. So that's good to see. Healthcare. Healthcare is in a beautiful downtrend. Look how clean this channel is, right? But this is definitely working its way to the downside. Biotech, it did not have a great day today. This is one of its larger red days. What are we down? 3.5% larger red days it's had in a while. Was trying to break out of this base. And that just kind of failed. Now, will the bottom of this base hold again? Hard to say. We'll find out tomorrow, I guess. REITs. So, we're getting into defensive stocks now. Okay, so this is okay. It's going sideways, holding its support. Staples making a move down with the rest of the market. And utilities are also making move down, if I remember correctly. Yes, utilities are also moving down with the rest of the market. So this market right now is not moving to defensive. So that's good to see, right? And that's another one of the reasons that I'm thinking, all right, we're probably going to have some pullback, but it's not going to be panicky. It's not going to be everybody's like, going to be dumping everything. It's just going to be a regular old run-of-the-mill little minor pullback. That's what it's looking like so far. So, I mentioned some setups and stuff, and they're just, these are here's some of the ones from last week, right? This kind of did nothing. I think that, if you were, it's probably still worth keeping an eye on, but really now you've got to kind of forget the diagonal line and, draw a horizontal line across the top of that. And now what you've got is kind of this broadening wedge. So that's not an ideal pattern. These aren't terribly reliable patterns. So, this is kind of what's going on in a lot of the setups that I'm looking at. They're just not. They're not setting up nicely. One that did really work really well, and I think it just ran away from everybody because this big green candle here. This is GNE Energy, by the way. This was Monday's candle. It made pretty much the entire body of this candle in about 2 minutes. So you had to be super fast in there on Monday morning. Otherwise, you were chasing, and I do remember saying, don't chase this, and I didn't chase it either. But this is kind of hanging in nicely here, right? I'm kind of liking the look of this, and it may give us a second chance to get in. Now, I'd like to see, if we're gonna, whoops, if we're gonna take that second chance, I mean, it's gonna, we're gonna be looking at this bull flag, kind of like that. Up a little bit, break out of the top of here, but I'd really, really like to see another 2 or 3 days inside of here. Let's get into next week, Monday or Tuesday. Sorry, a Tuesday or Wednesday breakout from the top of this bull flag would be perfect, especially if it, it continues to make a nice clean flag there. And the volume pattern is looking good too. Notice how the volume's coming back as it consolidates. So this is, in my opinion, still in play. But dangerous to just jumping up here, without getting a little more of a pullback, I think. That is all the stocks that I've got. I see that Marvin has typed Verizon.
Oh yeah, I know you. I was commenting when you was talking about XLC. Sorry, I should have built a little bit.
No worries. It kind of had did it have a little bit? I haven't actually looked at that at all.
No, I was looking at I was looking at XLC because it seemed to have been the lagging sector.
Yeah.
So sure. I'm like, I kind of been just paying attention to it, keeping it on my radar because, at some point, with it being lagging, once it finds, I think, like a little spot where it wants to finish falling and find a base, then, we could, I feel like that's a place where opportunities could happen, but.
Sure. Especially if the market is quite bullish and getting into a bit of a rotation mood where, things work really well. Like, for instance, for right now, industrials and financials have been working quite well.
Right.
If this and also technology, right?
Yeah, very much so. Yeah.
If we start to see some rotation out of those and it starts moving into XLC, then yeah, this is in a really good spot, to make a decent move. I kind of don't think it's ready yet, though.
Yeah, agreed. But yeah, I just been keeping an eye on it because I'm like, just keeping an eye and watching, waiting, and seeing.
And one of the things you can do, to help catch this sooner, is make yourself, these relationship charts. Oh, this one's kind of messed up. So, I mean, all you do is you go, say XLC divided by XLK.
Gotcha.
And so then, what you're wanting to see is this change, a change in direction in this. And that can give you some early warning. Like, we've seen this move down here. So we have been seeing some outperformance out of XLC, but over the last week, definitely a move down. So once that relationship starts to turn back up again, that's when you're maybe, hey, okay, it's time to go back into XLC.
No, that's helpful. I'll definitely have to do that. Because I've been, one thing I've been watching is Team. Because I winded up, like I said, I winded up doing just been studying and marking up charts, and I winded up, or at least been using the option watch list feature on Robinhood. Just kind of keep track. Like I was like, if I wanted to hop in a couple options, which I did for Team, and I just kind of had held on to it, even through earnings. But it paid off. It paid off pretty well.
Cool.
It was like some $200 calls. And once they hit a percentage, I was like, all right, let me just take it off the list as if I
Yeah.
sold it. But I've kind of just been watching that, seeing if it was gonna, hit, at least still hit this target. I think I had set at least for around like 190 to the 200 range to see if it's gonna climb back up there. Um, and that's kind of like just what I've been doing in between,
Yeah.
paying attention between that and the sectors really.
No, it looks good. It looks a lot like the market. It looks like it wants to take a little bit of a rest here.
Hmm.
That wouldn't be surprising, right under this 187 level. Let it rest here for a little bit and then break out through there.
Yeah.
Because there is, in so many of these stocks, I mean, this is your typical tech. This looks like your typical tech stock, right?
Right.
The big downtrend, and you've got lots of overhead, and this, especially this 210 level, is going to be some serious resistance probably. Because you've also got a downtrend just above that. But we also know that once these things start going, they can
They
really
move.
get
Yeah.
going. So yeah, no, it's good. Good to keep an eye on stuff like that.
Yeah.
Cool.
No, yeah, that's been helpful. And I made a note because I was watching the I was watching the State of the Union last night, so I was just curious about in terms of policy where at least I feel like the Biden administration wants to spend their time at least left. So it seems like, I mean, he definitely really, really talked a lot about like infrastructure.
Right.
So that kind of got me to thinking maybe I should kind of look at some stuff infrastructure wise in terms of, he particularly, I guess, talked about, I guess, more so with like roads and interstates and stuff. So I was kind of curious. I was like, I told myself today to kind of see if I could find a place that may either like a ETF that deals with in terms of those kind of companies, but I didn't get a chance to do it.
There's there is an infrastructure ETF. I can't remember the ticker right now,
Mm.
but I've got this in a different list over here. Let me see if I can find it really quickly. Uh, Unless you know of one.
No, I don't. It was on my
Oh,
to
PAVE.
do
That's
list to
right.
look
PAVE.
at one.
Whoops.
Oh, PAVE, gotcha.
Wow, it's been doing great.
Yeah, it has. Looks like it kind of a bull flag almost. Just off first glance, maybe at the top there.
Yeah, yeah, for sure. That's definitely a bull flag up there. How? Yeah, wow. I had no idea this is up here. I've got a performance list of all these, and this is like number 19 out of 90-ish that I have on this. Yeah, 19 out of 95 on my
Oh,
list of
wow.
ETFs that I use to kind of just track the market. But I think that it never really, it didn't hit my radar though. Like I update this thing every week. Oh, okay. So last time it was down at 32nd place. So this has moved up a lot.
Yeah, that's a big jump.
This has moved up a lot. Okay, interesting. So, so this is the easy way to play that space, right?
Yeah, for sure.
You don't have to concentrate in a couple of companies. Um, it's you don't have to really do any research if you have your thesis, you yourself are confident in your thesis. Um, you can just do something like this. Sorry, I'm being a little slow here. I
No,
just want
no,
to
no, no,
get
no.
this
You're
all
fine.
done.
This is helpful.
What do we got for? It's a little bit messy. Trying to find some other, support levels if it comes back down. I guess more recent support here. Doesn't actually it does line up with some stuff in here. Okay, yeah, let's get that one in. Oops. I think that works. And obviously, we got to get an uptrend in this. So we come off of here, something like that. But here's the thing. This right here is a pretty steep uptrend.
Yeah, yeah,
The very short term is like almost parabolic.
yeah,
So that pullback, definitely pay attention to that pullback. I wouldn't be surprised to see this come back a little more even. But it's and the other little thing, this flag is kind of messy, right? You like them when they're nice and tight.
okay,
This is a little bit loosey goosey in here. So caution definitely warranted in this, but it's not bad either. I would just want it to pull back more, I think.
yeah,
Just because it's gotten itself extended away from this trend line. Look here, right?
mm-hmm,
It got extended. Now it isn't as extended as it was here, but look what happened. When it got that extended. Let's compare the two. So where did it really, I guess, topped out here, right?
right,
But really, I think that is the sort of the beginning of the end for that. So that was about 11% away from the trend line. How far is it this time? Almost 9%. Oh, sorry, that's 12% away from the trend line, and now we're about 9%. So yeah, I mean that's due for a little pullback. Doesn't need to be as deep as this, right? Because we didn't go up as high. But I think that maybe coming down to this 2850 level,
mm-hmm,
that would probably be a really nice buy, actually, right in there. Because by
yeah,
the time it gets there, you're probably catching up to the trend line too.
make that's helpful.
So that's what I would like to see. So let's just if you're here next week and this hasn't triggered or anything yet, remind me to bring this up again because I think this could be interesting.
Yeah, I'll definitely do that, and I'll make sure. I've added PAVE to my sector, my ETF list in TradingView, so I'll make sure also too. I'll
Cool. And
set
there's
some
another
targets.
there's another one too. I don't think I have it in my list. I think that when I was putting this list together, I grabbed the biggest one from every industry. But sometimes it's fun to compare when there's a couple of them. It's fun to compare the two, kind of like comparing XBI and IBB.
Got you.
Okay, so there you go. Interesting. Okay, yeah, thanks for bringing that up.
No problem.
I see.
Thank you for showing me PAVE because I was like I knew that I was like I'm gonna have to find one. There has to be one.
Right. Cool. Uh, do you have anything else, or should we? I know that Casey Dotz is here, and earlier they asked for a couple of tickers in the Discord.
Oh no, I'm good. I'm good. That was my main question was if you knew any ETFs and like just give me an update in terms of like still looking at team and it's just like kind of amazed that was how it's been moving. So
Awesome. Cool. All right. Yeah, it's good to see it. Good to see you here. I'm glad you made it.
yeah, very
Um,
much.
and Casey Dotz as well. Okay, so we got Adobe and Devon. Is those you still want to take a look at those? I imagine. So why don't we start with Adobe? Is that right? ADBE. Ah, yeah. Okay, that's right. And just refreshing my memory here. Where was that? Was in tickers you're watching. I'm just gonna read your note real quick. Um, okay, yeah, you didn't really say anything about Adobe. Oh, Adobe just added a small amount for long term. May want to pick up some more. All right. Okay. Got a resistance level right in here. So we'll just get in some of our resistance levels. Right about there. Another one around here. We got one there. Some support. pretty decent support right here, I would say. You know, in fact, I really like this. I'm going to make that major support. And then obviously there's going to be minor support, you know, surrounding those two there as well. So we'll get those in. Kind of here and here. Whoops. Like that. I don't think we're going down there. I think this is off to the races. Oh, okay. You know, thanks for reminding me that I really do need to. I get, you know, so short term, often like during the day, and because I usually do my longer term research on the weekends. That yeah, I need a little reminder to wind the chart back a ways, and you know, and take a look at back in the past here. And yeah, the low definitely here, very much that kind of wick low there. So that's nice. That was a nice bottom that put in there. That's going to be nice and solid. Okay, and this resistance level, this 386 right here, that does go right back to that. So is that pre-COVID? Yes. You know what? Let's extend that across because I think. Wow, and it only spent 1 day above that. That's unfortunate. There we go. Let me get that perfect on that candle. Yeah, okay, good. Let me come. Look how perfectly that worked. Wow. These three highs right here are exactly the same level as that pre-COVID high. Crazy. Okay, so there you go. There's some important levels. So obviously this is not good to come. It's not really surprising. I mean, when you have when you make a nice move and then you have a big green candle and then you have like a gap up and a big move, you know, this is exhaustion, right? This is just, you know, everybody getting excited and the last of the buyers sort of jumping in, and then the smart money go, ha ha ha, we'll show you, and then selling it off, right? Now, it didn't pull back actually that far, and it's still right on the 9-day exponential moving average, which is nice to see. So, you know, this is definitely going to take another shot at this, and this is better this time because now it, you know, you look like you're getting some consolidation here. You're building a base here. If it can just stay in this base for a few more days, and you know, better yet, if it could, you know, base higher up in the base and then break out. Well, you said you wanted to add some more. I think that would be a really good add point, because then you know, you get a little bit of momentum on your side, right? Assuming you catch it early enough, you get some momentum on your side. Breakouts are still working for the most part, right? Some of them are coming back and testing. So if you did miss the breakout, you know, it may break out, come back and test. But I think because of this, I think if this breaks out, I think it blasts through that high and moves up to the next level, which is around 415. So I like the look of this, you know, and we've got the nice uptrend. It's taking a break right now, but this looks like a healthy break. So definitely keep an eye on that one. Oh, the other one was Devon. Okay, so you say this one you bought for the dividend. It is paying a nice dividend, isn't it? What is that? Oh, so this is like what, $1.35 every quarter? 4.5. Wow, this dividend must be like 8% or something, eh? That's good. However, it's not good if you buy it here and then it comes all the way down to 61. You need a couple of years worth of dividend to make that back. So let's see what we got here. Long-term uptrend. Like most energy stocks, slowing down now, almost looking toppy. Is this? I don't know if you saw the part that the little bit that I did a while ago on Tesla, and when I went into the stages, the 4 stages of a stock or a market, where you get stage 1 where you get accumulation. Usually it's a little flatter than this, but you get accumulation, and then you get your stage 2, which they call markup. That's where you get this really nice uptrend, increasing price, and then you get stage 3, which is basically the top. They call this distribution. This is where the smart money is selling to the dumb money. Well, even up here, some of the smart money starts selling up here, right? Yeah, the bigger money, everybody is bought down in here and has made all their money. They're now distributing. They're selling their shares up in here, and then you get what's called a stage 4 decline, and that's where the stock moves down a lot. And that's what's looking like what's going on here. Now, this is an energy though, and I think there's going to be another bull run in energy. I just think you need to be really careful. I'd hate to see kind of the energy complex fall apart, or something's wrong with this company and it falls apart, and you get trapped in here. So I think you need to be really careful and see if there's a spot where you kind of cry uncle, right? So let's go back. Yeah, not surprising. Look at the look at this pivot right here, and that's where it's topped out this time. So let's get a major resistance line in there. In fact, I should probably actually go to a weekly chart, shouldn't I, rather than just well, we can go back all the way to 1985 on this. Crazy. Okay. So yeah, I mean, kind of what I was talking about, right? You've got that, sort of the stage 2 markup in this case. I mean, it was almost forever in this thing, 1990 up until 2008, 18 years of, stage 2. And then it had its, 5-6 years of that distribution phase, that stage 3 phase. And then it went into its stage 4 decline that culminated in COVID, no doubt. So all of that seems to be happening a lot faster this time around, right? I still really think there's need to be cautious here. Let's get more levels though. That's a really important level there, isn't it? All right, we have the major levels, I'd say. So I think obviously mark this up on your own chart, but yeah, I think you can see now how this 51-ish, maybe down to 50 level is almost got to be your line in the sand. Now we've got the 100-day moving average there. That's good. But also I want you to take note of what happened. Look at this. This is really nice. The tweezers here, right here. This is called a tweezers pattern. Where you've got basically 2 hammers, 2 consecutive hammers, and then you've got that nice move up after it. And they happened with the volume. The volume was a little light, not bad, but still, you could get that again down here if it does come back down here. I remember we're looking at the weekly still, so yeah, obviously heavily dependent on what oil is doing. I'm not sure if these guys do a lot of gas or not. But this, look at, right now, can't get above all these moving averages. It's just below them. But did turn up a little bit with oil. Not doing as well as oil is, though. So, yeah, again, really need to be cautious here. And watch this closely. I think, all the energy plays, this one is just seems so indecisive. It's, you notice, I mean, look at it, we're right in the middle of a major, support and a major resistance. And it's really hard to make a decision when you're in the middle of that. It's easier to make a decision at either end of that, right? Yeah, yeah, it does look a little scary. You're in it, so, oh, geez. Yeah, that's a, you probably got caught up in this mess here, right? When they move down so quickly like that, it can really catch you off guard. Yeah, just be careful. I can't, I'm having such a hard time giving you any advice because I'm not sure what I would do here. I hate, like I said, I hate when they're in the middle of a range like this. It's like the worst time to try and decide to do anything. Um, because you don't have any decisions really to make until down here, but 50 is given back way too much probably if you're in at 70. Or ideally, I mean, it goes up to here. And if it goes up to here, then maybe you sell a little bit of your position because it's probably going to, roll over again, right? And if you did sell up here, you can always buy some back if it breaks through. So that's where we are. We are at a place of extreme indecision in this stock, I would say. Yeah, sorry I don't have better news on that one, but Adobe is looking good. I like the look of that one. What else do we have? I see Shills didn't make it, but hopefully he'll be watching the recording. And he wanted to look at Tesla and Microsoft. I know we've already looked at those. We went over them quickly, but he was specifically asking about some levels in Tesla. So I'll bring this chart back up. Oh, and yeah, here's what I was. Here's how I marked up that Casey Dots when I was talking about the stages, right? I marked it up here. Here's your the blue in Tesla. That is your stage one. This is the accumulation phase. And then the green, obviously, your accumulation. The yellow, your stage 3, distribution. And now Tesla, at least according to me, and I'm not necessarily right. The red is where you really got into your stage 4 decline. You got into a little bit over here, but it wasn't, once this broke right here, once this major support broke, that's when you can really say, yes, it's in stage 4 decline now. Now, it's got all of that back, which really surprised me. I expected to see this fine support somewhere in around the $100 level and then go sideways for quite a while and do the stage 1 thing. So I'm surprised to see this V bottom. It's been quite a ride up off of this. Now, obviously, this 200 area, 206 was that major support line. That's going to be some major resistance, but we closed above 200 today. So these are all levels that are defended. You can see that the shorts had been defending that 200 level. Well, they lost it today. We got to close above 200 today. So now it's up to the bulls to defend that level, should it come back there. And they really need to actually get through this 206. Once they can get through there, I think they've got, clear sailing up into around the 200-day moving average. This is a simple moving average. And you can see that that is right up here where we had a little bit of a consolidation. So I'll throw another line on that for you right there. So this is kind of a minor level in here. But when you add in the 200-day moving average to that, that becomes a little bit stiffer resistance. And then, as you can see, on the way up, there's still some overhead in this. So if this would start pulling back at all, if it gets to like this 206 and can't get through, or it gets through but puts in one of those ugly reversal candles, a lot of which we've seen today, then you may want to get out of the position or trim some profit off or whatever. I'm happy to see this. I wasn't happy when I was calling the demise of Tesla, right? Certainly not happy to do that. Really happy to see this move on the way back up. nice to be proven wrong, and that it went back up quickly and didn't go sideways for months. And Marvin says, the way I see Tesla around on this street, I'm not surprised at the price action. Yeah, there are a lot of Teslas out there. You see them all over the place. So there you go. You know, great. It's still a great company. I mean, don't get me wrong. It's just, you know, it's just one of these companies that's terminally overpriced, in my opinion. But you know, these stocks can stay overpriced forever, right? You know, the valuations are still kind of crazy. Even pulling back into here, the valuations were crazy compared to anything else, but compared to itself, the valuations were fantastic. And I guess that's why we got such a strong bounce out of this. Well, yeah, of course, Elon. You know, you know, Marvin's saying, not to mention the charismatic CEO figure. Yeah, I mean that's one of the very nice things you can say about him, and that works against him as well too. Though it does, it definitely works against stock price. You've got to be, if you're going to play in his companies, you've got to be willing to accept some volatility. That's for sure. So that's Tesla. The other one was Microsoft. Okay. So talked about this too earlier, and in regard, you know, with regards to Google, you know, was Google's little fiasco today a reminder that ChatGPT isn't quite ready either, that it's capable of making errors. You know, and maybe that's why we saw that kind of pullback. This is not a healthy pullback here, in my opinion. That is a big, ugly red candle after a gap and move higher. Not what you want to see. So I think,
Hey, Kevin.
Yes.
Oh, just also wanted to make mention to let you know too. I think part of the pullback we've seen from Microsoft is also, I think, the EU antitrust laws weighed in on the Activision Blizzard merger with Microsoft, and it didn't sound good. I think one of the recommendations is like maybe if Activision and Blizzard split, then maybe the merge can happen. But I think there was also some news. I don't know. I think it was earlier this week, not Monday or late or Friday. That also might be playing a part into it as well. Just wanted to throw that out there to you.
Well, yeah. I mean, oh wait, that was earnings on Activision. Okay, but yeah, Activision had a bad day today. They recovered off their earnings really nicely, and then gave almost all of it back today. Okay, I was unaware of that news. Thanks for letting me know. So there you go. So that is definitely a headwind for Microsoft. So if that's the case, then I expect we could see even more pullback. Maybe, you know, come back down to this gap. Thanks for that link. Maybe even down to this support here. There we go. Here is the here's the link that Marvin just put in there for us. Activision stock drops as antitrust doubts on Microsoft deal mount. UK's regulator portfolio. Okay. All right. So there you go. It's if you're Shills, if you're thinking about anything with Microsoft, you might want to look for that story. Google that story and see what's going on there. Because to me, that just is more downside. That's just too big a headwind. I mean, I knew all this stuff was going on, but it sounds like they're starting to really weigh in and you know, getting close to rulings on that. So you'll want to watch out for that. That's you know, in a way, it's kind of like playing earnings, right? There's a lot of risk in playing earnings. There's a lot of risk in playing these stocks when they've got some sort of big regulatory outcome, you know, about to hit the tape. Can put a real tape bomb into things. You know, it can make, you know, it can give you a huge gap down or a huge gap up. Okay, so Casey Doss says, if you have more time, it's been a while since we've looked at Disney. Disney had earnings after the close, so good timing on that. I've been holding since 134. I want out. Yeah, okay. Do you think there's a lot of people in my position? I imagine there's a lot of people in your position. Look at, I mean, Disney's the kind of stock I think that people buy for their kids, right? So it's, you're going to have a lot of people who hold this, very, very long term. So we don't need to worry about them. We don't need to worry about the overhead of those people wanting to sell when they get back to even. We need to worry about people like yourself. You want out, right? You want out when you get to even, or near it, or maybe just above it. So if you're 134, you're in this area. There were a fair bit of there's a fair bit of volume done in that area. There's a fair bit of volume done at the next step up, like this 150 area as well. So that's overhead all the way up, right? But if you look between where we are now, especially once we get a little higher, above the 120, once we get above that level, you can see we've done hardly any volume up in there. Not until we get to the 130. So I think that if we can get above 120, we could move fairly quickly to 130. Now, I went out shortly after the close. I saw Disney release, and they popped up, and I saw them pull back, and that's all that I know about Disney. And Marvin says that they popped after hours. He also says Bob Iger returning sales were through the roof, and they announced a layoff and restructuring of execs. Perfect.
Yeah, sorry. I know it's kind of. I was trying to find the link just so you could have it, but yeah. So there you go. I think it was all of those things. I think are were considered, I guess, good news for
Soars. We got to look at this after hours chart now.
Yeah, we do.
It was only up when I looked at it. It went from like 111 to 116, and then started pulling back. And then I had to run out, and I haven't looked at it since. So sounds like it's up. That's not soaring. So I think we're going to see something nice. Mid-activists attack Disney beats on profit and revenue thanks to games at theme parks. But Disney Plus subscriber count drops more than expected after increase in price for ad-free subscription. Okay, interesting. And again, Casey Dots, maybe take a look on Market Watch for this story. This story is going to be all over the place, right? Okay, so there we go. Here's our context. We want to see this above 120. If it's above 120, we think it can move fast to 130. Let's take the after hours chart. And we could not hold above 120. So, oh my God, I went all the way up to 122 and then pulled back. It's too bad to pull back from there. But, we could easily see another move tomorrow, especially if the market is up. I'm looking at the futures right now. The futures are a little green. So, maybe we can get, another little bump up here. Dang you, Disney. But watch this level. This high right here is going to be important. So what is that at right now? So 122 to 122 and a half. Watch that level tomorrow. Day traders will sell at that level if it comes up to there. And so what we want to see, if it does come up to there, you would probably see, let's say at the open tomorrow, we're still here. And they start buying it up. But what happens is you come up to here and they sell it. We don't want to see a big pullback. Maybe a 50% pullback, and then we start moving up again. That would be nice bullish price action right there. But let's mark this up on our daily chart. So that was 122 to 122.50. Yeah, something like that. Cool. So that's where we got to. So we've got, this 120 to 122 level here is something to watch out for. But, this all seems like good news, right? Disney, I have no doubt that Disney's going to turn the corner. They're going to figure it out. There's a lot of smart people there, right? It's sort of like Meta when everybody was kicking them when they were down, and I need to include myself in that. You kind of forget that these companies are able to attract really smart people, really smart executives, and a sort of a different class, a different level of kind of worker. So yeah, they have problems along the way, but they figure it out. So in the long term, I think Disney's a great company, and they will come back. So there you have it. The dividend got reinstated. I missed that in the.
Sorry, I meant to. I was typing fast, but yeah, Iger did ask the company board to reinstate the dividend by end of the calendar year.
Oh, by the end of the calendar year.
Yeah. That's what I was trying to. Yeah. So sorry. Okay. So that still to me, I think is, if the board approves it, which I would imagine, that could be good news. So
that would be really good news. I can't remember what. It's been a while since, because they killed their COVID, right?
COVID, yeah.
Okay, so 146, 88, 88 a quarter. Oh, you know what? Actually, sorry, bear with me one sec here. Where is my details page? There we go. Oh, of course, no, that's not going to do it. And what was it up there in around 150? 2.5% dividend. I mean, that's not huge or anything like that, but that's not bad, right? It pays you a little bit, especially because people, like I said, this is one of those stocks that everybody kind of, wants to have in their portfolio that they're going to hold forever kind of thing. Yeah. When it stops paying a dividend, you kind of got to question, do I want to hold this forever anymore? So reinstating that is, even if it's only 2, or it won't be 2.5 when they reinstate it. It'll probably only be 1 the first time around. But, that's good news. And it also, what that does is, so, they've asked the board to do it. They're going to reinstate it by the end of the year. That means that maybe next earnings, they can bring it up again, right? Mm-hmm. And, just to get that little extra boost. So I'm really happy to hear that about the dividend. That's the biggest piece of news there, in my opinion. Cool. All right. I think that is about that. I've showed you everything I want to show you. I think you guys have asked for some good tickers. We've looked at some good charts and things. I think it's time to call it a day. So, we already did that part. Let's take a look at what we got coming up. So I got February's calendar done finally. Next week, the trading roundtable. So this is where I want all you guys to bring a trade you've done, and we can analyze it in great detail. And also, we don't post the trading roundtable on YouTube. It will be posted. It's not public, but it will be posted for people in the Discord in case they want to watch it. But I want you guys to feel free to, discuss your tickers, and it's a safe, friendly space where we can all try and help each other out. So that's coming up next Wednesday. And as always, I'll be doing the market briefing video on the weekends, and this is still like a week and a half away, the 20th. Markets closed for I think it's President's Day. So there we go. There's the calendar for the rest of the month. Thank you, everybody, for watching. Thank you, guys, for coming live. If you're watching the recording, hit that like button, share, and subscribe, and enjoy the rest of the day. We'll see you all tomorrow.